Bitcoin's price is swerving around a little bit this morning, leaving us to wonder if it made a few bad decisions last night. The CME futures take the day off to celebrate the holidays, meaning that the price suppression is a little bit on the minimum today. Happy New Year's to everybody. And the question on our minds is, will this decade bring in our cups running over with Satoshis or continual stop loss hunts to the upside and downside as we saw in 2019? Let's take this opportunity to ring in the new year with a few Ripple resolutions, a few Bitcoin betterment plans, and perhaps some Ethereum effervescence to ward off our hangovers from last night's celebrations in today's episode of Breaking Bitcoin.
I'm Cap.
I'm Carlos.
And we're with Particle.io, and this is Breaking Bitcoin.
Welcome back to another episode of Breaking Bitcoin with your host, Justin Wise. Today is January 1st, the first day of 2020. Happy New Year, everybody. Hopefully you're doing fantastic wherever you happen to be tuning in from, whether that's on YouTube, Facebook Live, D-Live, Twitch, or on Roku with the Investor News Channel app. If you want to support the show, you guys know what to do. Thank you so much for getting us to 7,000 subscribers over here on YouTube and growing quickly on the other platforms. You guys are amazing, and I wish you all the best for the coming year. We've got a lot to talk about, This is, of course, your daily source for market updates, sentiment, and news for people of all ages, all styles of trading, all levels of trading. I like that. It's good. All right. So we're going to be talking about, obviously, Bitcoin's price activity today. Looking for a movement as we kind of creep into the noon. One thing that I do want to mention, though, is a couple things can happen. The CME futures are off today. So I always get kind of hesitant about taking dominant moves on holidays for the traditional markets because those traders are usually, people would say, well, they're just trading cryptocurrency. Highly unlikely. And often you can get significant reversals of moves that are made on weekends or holiday days. For example, movements that are made on Saturdays or over the weekend. Generally, anything that happens on Saturday is almost always countermanded by what happens Sunday evening or moving into Monday morning. Quite similar for holidays as well, as a common pattern that I've noticed in crypto. But we're going to break that down. We're going to be talking about Ethereum today. On December 31st, yesterday, there was apparently a vulnerability in the network, and this is all regarding Parity, which honestly, in my opinion, has been kind of a nightmare lately. But it's so far been patched, but according to analysts, this is a vulnerability that could have taken down the entire Ethereum network, and this becomes more of a concern as Parity continues to want to shift away from obviously Geth being a different client, but away from the structure that Geth has, which was immune to the attack. So anybody running the Geth client was absolutely fine. But people running the Parity client, as they want to switch toward a more DAO model, this vulnerability becomes more of a concern, or attacks like this become more of a concern. So we're going to break that down as well. The Federal Reserve is kicking off 2020 with some more quantitative easing. So we're going to talk about that and the downsides. We're going to go over some New Year's resolutions. And we're also going to be talking about Bitcoin versus altcoins, kind of what are the strengths of Bitcoin versus altcoins moving into 2020, talking about our investment decisions and kind of making a game plan for this year, because that is the road to success, having a plan and executing on that plan. Before we get started, thank you guys so much for joining us today. But before we get started, I want to give a shout out to today's sponsor, Coygo. Very proud that they could sponsor the show. There is a link down in the description, coygo.crackingcryptocurrency.com, where you can download the beta version of their application and try it out absolutely free. It does not cost anything. You can trade from there. Everything happens on your desktop. This is not done on a server or a web app. This is an application that you download to your desktop. All of your API keys, if you choose to utilize them to actually trade your accounts, are going to be stored locally on your machine, encrypted. Nothing ever touches Coygo servers. It's an application that allows you to manage multiple exchange accounts from the comfort of your own desktop, quickly transfer funds between accounts so you can easily send funds from Bittrex to Binance without having to go to any websites. You can do it all from Coygo. It allows you to take advantage pretty quickly of arbitrage opportunities. They've also got a very neat live order book analysis. You can see everything that you would typically get on any charting platform. And I've tried a lot of these turnkey solutions, and I like Coygo the best. And the best thing about it is that it's free. So we don't make any money from you guys clicking that link. It's just for tracking to see how you guys like it. So Definitely check that out, Coygo.krakencryptocurrency.com. We're going to hear from them, and we're going to get into today's analysis. Here we go.
Do you trade cryptocurrencies on multiple exchanges? Coygo is here to help. View real-time insights, including trade analysis, order book superiority, arbitrage scanning, and more. No API keys required. Want to trade, transfer between wallets, or track your portfolio across exchanges? No problem. Just connect your API keys. They're only stored securely on your machine. Coygo servers never have access to your cryptocurrency accounts. Sign up now at coygo.app.
There you go. And I also, of course, want to thank today's crypto comment giveaway sponsor, Spectre Security Coin. XSPC is the token. Make sure to go check it out on CoinGecko. Make sure to go check these guys out at spectresecurity.io. Good friends of the channel. And we are back for another random YouTube comment crypto giveaway. So yesterday's video, we were just going to randomly select a winner. And don't die on me now. Sandra Sayers art, beauty, music, and colors. Come on, baby. Let's try it again. John Famiglietti. He says, "Writes a fraud." Happy New Year's, bud. I always love violent exclamations of distaste, followed by, "Yo, you're cool, bro." Thank you so much, John. Highly appreciate it. Hopefully you're having a great new year. Make sure to get a hold of me in Discord or our concierge bot, and we will tip you some crypto into today's market analysis. All right, here we are. Hopefully you guys are doing fantastic. Let's do a shout out to everybody. We've got Jap, Saintsy, Robin, Rob, Taylor, Jean Francois. We've got some bots in the house. Dark Rico, Caprica, Arbod, Challenged Investor. Did Craig Wright send me the Tulip Trust package? Shh, we weren't supposed to talk about that live on the stream. We're waiting for 7,800 and then we'll dump. Mastash and Lee are in the house. Hopefully you guys are doing fantastic. Let's start off. It's going to be a good year, guys. It's going to be a good year. 2019 was a great year for myself, for my community, for our community here, for my family, for my friends. And, you know, we've seen a lot. 2019 gave us a lot. We saw the doldrums. We saw the bottoms. We saw the depths. We saw the exhilarating highs of a bull run. And we've seen the sometimes, just pick a direction of consolidation, which Bitcoin can be commonly, for many, many traders, a frustrating asset to trade when it is ranging and or consolidating. And this is why we preach the virtue of patience, money management, strategy building, because these times are excellent. You know, the last 4 or 5 months have been absolutely fantastic, or even taking a backseat and working on developing your strategy. You know, building something that is going to be with you for all of 2020, right? If you closed out 2019 at a loss, you know, I would say that this all represents a fantastic opportunity to sit back, develop your strategy, backtest, and backtest. There's never a moment that's too late. There's never, ever a time where you can say, I don't have time for this. I'm not going to be good at this. I can't achieve this. I'm losing too much, or, you know, I don't have the time. Whatever excuses may come to your mind. Remember, this is the new year. This is the new decade, and it's time to take all that stuff, put it in a bag, get it all together, and take it somewhere. You know, take it to the museum, take it to the store, sell it. Just get rid of that nonsense. All right, just get it off. Let's start the year out strong. Resolutions, strength, dedication, commitment, persistence. You guys know the deal. Anyways, all right, so 30-minute time frame. Down the lower time frames here on Bitcoin. We've got, you know, honestly, I'm not going to lie. We've got some bullish activity. We weren't able to have the breakdown that we wanted. We didn't just fall right off the map as we were kind of closing out yesterday's show. We did reverse from the $7,100 area and butting up against the 7,200. And we're just squeezed, right? We're just squeezed in between currently 2 points of control, the point of control from today and the point of control from yesterday, the initiation of a lot of selling from yesterday. You know, very much like a very tightly compacted Oreo sandwich. I'm not going to lie. I think that's a very good analogy. So anyways, waiting for a definitive movement. I am in a short position. I am actually right at break even right now as we speak. right at break even now as we speak. As I said, I'm not going to be faffing around with this trade. I've spent the last few hours. Actually, I've been up since 6:30 watching this, and put on a few. I haven't adjusted my Bitcoin position whatsoever. I've picked up a few other intraday trades on altcoins, posted those to the members, obviously, and those are doing okay, as well as some of our other swing alts are doing quite good as well. But as far as the Bitcoin trade, as I said yesterday, I'm gonna have to be proven wrong on this one. I've got my stop loss where it needs to be. I'm going to be watching for that strong close above that level to invalidate that I am wrong about this trade. When we kind of get into these tightly compacted areas, when we get into these tightly compacted areas, you want to be decisively proven wrong on a trade, because it is easy to get to these moments of inflection, these indecision moments, and waver. And often flipping direction can be, statistically, if you average it out over enough trades, not the best choice. So I think that largely the sentiment is quite bullish, currently smacking our head against this current level of resistance over and over and over and over again. What I'd really like to see here is if we are going to have some bullish momentum coming out of today. Of course, I think the scalping opportunities are going to be there on the lower timeframes. But as far as picking your kind of trend position and going with that, all of the sentiment that I'm seeing come in is overwhelmingly bullish. BitMEX funding remains overwhelmingly bullish. And I think that overall, largely, we are in a I don't think that I know that we haven't invalidated the bearish trend. So trade remains open. We'll see if we can flip the 7220 area. If we do pop up, see if we can flip that as support, and then potentially we'll be looking for trades to the upside. Currently, as far as the lower time frames for the day, I see our current level of resistance that we're just struggling with right now. Again, coming in right where we are, around 7225. Overhead, we've got the previous point of control from several days ago, and really the initiation of the selling that brought us down here up at around 7,400. So we've talked about kind of the swing trades before as well, above 7,500 to the $8,000 range. And so to get a picture of kind of what we're looking at beyond intraday momentum, let's, as we always do, let's this is a good opportunity to take a look at. There we go. Got the yearly chart, and from the yearly perspective, doesn't look too bad. Big old wicks, I'm not gonna lie. I'd say that this yearly chart back in 2018 is a little bit more decisive. But anyways, I don't see really anything. What's the word I'm looking for? I've looked at this kind of yearly chart before. I don't really see anything that interests me off of this. I think that I've seen some charts posted of this. Again, falling volume. But overall, Bitcoin is an asset that's so new that I don't think looking at the yearly chart really kind of gives us any of the data that we want at this point in time. Let's actually go and take a look at the monthly, which I think is more important. Monthly, we've talked about our levels here before. Let's just minimize that. Currently, as I said, sandwiched. So overall, I think from a monthly perspective, bearish. I think that a lot of individuals might look at this already positioned into monthly shorts. We talked about that coming off of the close of the November monthly candle, gave us the short signal all the way down, and with the target of ATR target of 4.9 thousand. And then we mapped out that level of supply from 5.2 to 4.9. And I think a lot of people don't believe that that's on the table. I think that it is. There's also a nice habit that we've noticed in January. If you guys think back to January 2018, when we were, dumping massively off the all-time high of Bitcoin's price, which of course was an isolated incident in that kind of massive run-up, that insane run-up that we did experience in December of 2017. But Bitcoin does have a penchant and a habit for taking a pretty significant dip in January, and that dip generally being a profitable dip to buy. So as long, until we're really past Q1 of 2019, with this invalidation could come earlier on the weekly or on the monthly. We can get some clear invalidation, of course, but looks like sell on green, buy on red. Yes, on the yearly time frame. That's for the long-term positional traders out there. Although again, you're going to hear people talk about 10-year, 20-year, 50 years, but I digress. Nobody's doing 20-year trades. Now, although while we can get invalidation of those monthly timeframes, weekly timeframes, our real positional timeframes here for our trades, they're still on the table. They're still on the table. And I think that we can begin to kind of have a little bit more confidence in not dipping to those lows if we can get into, say, February and March without descending to those levels. If we really do hold 6,000 strongly, get above 8,000, then we can start to feel quite more long-term bullish. But that's the game plan. We don't have any of that information now. From this kind of perspective, I think that some could argue that this is kind of a no trade zone on the monthly or the weekly, stuck in between two levels. And by no trade zone, that generally means no initiation of trade, because as I said, the November signal to the short side on the monthly time frame, and that has not been invalidated yet. Parallax flipping bearish, Wadatar explosion giving us the powerful signal, and on the monthly, that has not been invalidated yet. And if we go to the weekly, that has not been invalidated either. Again, the chart patternists are going to be looking at this as a bearish flag, in my opinion. I know that some people are talking about this as being in a kind of a descending triangle on the daily, or if they kind of zoom out. I don't see that whatsoever, and I don't use chart patterns to trade. I don't think that they have a high probability of success, but just looking at kind of the notice, you don't need the pattern to kind of tell you how price reacts from a price action perspective. We see consolidation, we see volatility expanding, and typically when you're in that mode, you want to wait for the breakout and take the direction of the trend because there's far more profit to be made there. You have a higher rate of success for waiting for confirmation of whichever side of consolidation decides to break, rather than betting and gambling while one is inside of the range. And this is for our swing positions. Of course, for the lower time frame traders who have a strategy that gives them a high rate of success, this is actually your area. This is actually where you thrive. When we have tight compression, when we have lowered volatility. But just keep in mind, don't be over risking on setups like this, just like I don't. Even though I am in a position on Bitcoin, it's not a large loss if I take the loss, position size wise, because I wait for trending opportunities. I wait for re-entry opportunities, and I like to trade in the direction of the dominant trend. And although I have a fairly successful reversion to the mean strategy, and although I have a fairly successful range trading strategy, which I've dusted off and brushed off a little bit more, and that kind of encompasses less price action, more order flow following. The reality is that you just by nature of being more frequent and on the lower timeframes are going to have a higher rate of failure, no matter what. I don't know anybody that has optimized lower timeframe strategies that have higher than on average a 60% win rate. Right? There are a few, but they're very few and far between. Moreover, a lower time frame strategy is going to be generally about 50 to 60% on the high side. Win rate strategy, or win rate, percent profitability. And it's the money management skills that really make those strategies profitable, cutting the losers early and letting the winners kind of ride until the top of the range. Although mean reversion can have a higher rate of success, it just depends on how you've optimized your system. But again, lower position size, lower risk when taking these lower time frame trades, absolutely. And waiting and being patient for the opportunity to come to you. Again, you don't want to be calling tops and bottoms. That is for gamblers. That is for fools, in my opinion. We want to be waiting for validation and then trading in that direction. I think that's the route to success. And that's how I've experienced the most success in my trading. So anyways, but here on the weekly, let's look at a few things. We're going to pull up Volatility Expander on the weekly. Right smack dab in the middle of the weekly volatility expander. So really nothing coming in from there. As far as our weekly EMAs are coming, we still have overhead resistance from our 55 EMA around 7,800. It's descended all the way down from 8,200, where we were looking quite a while ago. From 8,000, 8,003, I do believe, where it was for the majority of December, and is now down around the $7,800 level. So chunking down quite a bit. It is actually now lower than our level of high volume node volume profile resistance coming in. I don't know why these aren't showing up. But again, from the 78.57 region to the 83.31. So again, completely below those levels now. But again, that is our overhead level of supply, and the area that I would really like to see break significantly on a closing basis, before I start getting really bullish. That's where I will be pulling off my hedge. That's where I'll be going spot long on Bitcoin, and I'll feel that on a higher time frame, we'll have invalidated the sweep to the downside and further downside, and we are going to just see upside from here. The other thing that I really am cautious about, keep this in mind. So I'm going to be a bear all the way up to 8,000, and people are going to be screaming at me, and I don't care because I've done this longer than them for the most part. The reality is that we're foreshadowing a weekly 1355 exponential moving average, or as I call them, baseline cross under. And in the history of Bitcoin, that has not been wrong on the weekly time frame. It is one of the best possible, simplest strategies that you can follow. And when that happens, although you have missed the first half of the downside, you are well in store for the second half of the downside or upside. Because, for example, it happened back here to the upside. So if you waited for the 1355 cross up, yes, you would have missed 50% of the price appreciation. That's why we trade on the daily and look for initiation on the daily. But you would not have missed the blow off top. You would not have missed over 50% in potential profit. Just as if this occurs to the downside, you will not be missing out statistically on the last leg of the downside. So I think a movement from the $7,000 range where we're at right now down to 4,900 comports with that quite well when we've come down from 14,000. So I think that the opportunity and exposure to the downside still strongly exists. We also have, we also have in that same range, the 200 weekly simple moving average, which if you guys will recall from back in January of 2019 is where we did find market bottom previously. These levels are important. Like these, the 200, although they're memed a lot, they are significant and they can be traded off of if you just look to use them simply for what I think they're intended to be, right? And when you find multiple levels of confluence on your higher timeframes, you can begin to build a game plan. And that's what you need. You need a game plan. Doesn't matter if your game plan's right or wrong. Just having one is going to serve you better than the majority of market participants who are just randomly clicking buttons based on their emotions and based on their feelings. So don't be that guy. Be the guy with the plan. Be the gal with the plan. And if your plan is consistently wrong, then you know that you can change something in your plan. But not having a plan is not the route to success. So really nothing's changed, really nothing new to report here on the weekly. We're right where we are. All that's really happened is, of course, there's going to be a lot of bullish sentiment in the air for 2020. That's why we can see that. If we go over to something like, if we look at some of our long-term indicators, we had the hash ribbons flash a buy. We did close below the 20 simple moving average. We're foreshadowing potentially a 10 and 20 simple moving average cross under. We can see that BitMEX funding is extremely high, not dangerously high. Typically when we get above 0.1 on BitMEX funding, we tend to immediately crash down to the downside. But it does show us that sentiment is extremely positive. Retail sentiment is extremely high. I was on Twitter this morning, and I mean, there is not a bearish post to be found. Now, that does not mean that they're wrong. There are times when, hey, market was right, long Bitcoin, screw it. But more often than not, the market is not more often than not, the masses are not right and they tend to get hurt. But keep in mind that the CMEs are offline for today. And as I said, we can often make counter trend progress kind of significantly. Bitcoin's volatile. So I could actually see, for example, my stop getting hit at 72.60. I could absolutely see that. And I could see price maybe even moving up to around 7,400. I could see that on intraday volatility. I could really see the kind of bullish push. And then when the CME is open tonight at 5, I could see that getting sold into pretty hard, right? I could see that getting sold into pretty hard. And of course, the market participants on the cryptocurrency markets, not on the CME side, can initiate that selling off quicker. But that will mean, just keep in mind that if we run up to 7,400, 7,500 even, for the love of God, today on like New Year's Day bullishness, which, lower volume, higher volatility, keep in mind, right? But high volatility movements on low volume are largely nonsense. So although they can be profited upon today or the day of the trade or the day of the scalp, whatever you want to call it, you want to be very cautious for like, oh, hey, look at this on the 30-minute chart. We got a 1% move. Let's zoom out to the 4-hour and look for a swing long. Don't do that. That's not a good idea. In fact, counter trading that on the higher time frames is generally the best idea to do, especially if you're coming up to a significant level of supply or overhead supply or support or resistance. Because so to finish that point, that means that we'll gap up. That means that the CMEs will gap up. And what generally occurs when we gap up on the CMEs? Right back down. So just be a little cautious, guys. I have no problem with being bullish. I love Bitcoin. I'm fundamentally long-term bullish on Bitcoin. That's why I hedge my Bitcoin instead of selling my Bitcoin. I've been doing that for a long time. Also, the taxes are a little nicer. I don't know if you guys are aware of that. But we're not out of the woods yet. No, we're not out of the woods yet. We need some Ethereum effervescence, I believe, before we can. Wonder if I've had that alert open this entire time. Sorry if I have. Okay. So anyways, getting back over, let's switch down from the weekly and go to the daily. On the daily, not a whole lot to support. We have closed below, as I said, I didn't want to see. We did a couple days ago And then following on yesterday, we did close below and continually close below our daily EMAs, both the 13 and the 21, 13 still below the 21. And they're just super flat, which is just another indication of range contraction, consolidation. Parallax is going to give us a bearish signal on today that is being kind of countermanded by the bullish signal from Wada explosion. Of course, Wada is still bullish on the daily, very weakly so. But one thing that I do want to point out, we continue to see volume fall off. Volume continues to fall off, indicating that we want to wait, typically on the daily, for that initiation of volume, that bullish movement, the strong close, and then take the trade in that direction. You can speculate on that and gamble and take more risk by watching for the move on the lower time frame. But when it comes to the daily, remember that if we do end up breaking this range one way or the other, there's going to be a large movement in tow, $1,000 movement potentially, if not larger. If we look, again, if we go out to that weekly and monthly, we can see that actually the movement to the downside and as a result, movement to the upside is around 3,000. So just keep that in mind, a little less than about 2,600. So just keep that in mind. Be patient. We don't really have any clear signals from the daily yet so far. And looking at daily volatility expander looks very similar to the weekly volatility expander, just a little bit more bearish. And we do have the lower boundary of the volatility expander down at 70.15. So up a little bit from 6,800 as it was a few days ago and down from the peak over here. But overall, nothing really positive here to report. Below the baseline, below the Hall moving average 20. So we won't be going long anyways from the daily perspective. And below the primary baseline of the 13 exponential moving average anyways. So nothing, again, to report there. Forming this nice bat wing pattern. I still see people talking about the macro or daily, inverted head and shoulders that kind of looked like I would assume that they would be, like for real, I don't know how they're drawing this, but it is possible. Like you can have a very sloppy head and shoulders. But I think that from chart pattern perspective, if we were going to form something at this point in time, you would really, for head and shoulders to have some validation, you need to come down close to 6,900 on this next leg down. This is more like, I don't know what you want to call it, a broken, an invalidated W pattern. And it looks like we're trying to form an M pattern right here. And that'll be confirmed on a daily close below 71.36, which we haven't gotten yet. We have wicked off of that level of support. Keep in mind that we are down here at local support. We have wicked city down here quite a bit. These are bull wicks, but we've also tested this 1, 2. This is the third touchdown. Typically, you get the most violent reaction off of the second. I think that by the time you get the third, if we do get a push off of this, remember, the more times you test support or demand, the weaker and weaker and weaker it gets. And yeah, so I don't really see anything in the form of chart patterns here, at least nothing that tickles my fancy. I don't even like chart patterns in the first place, but I digress. Going down to the 4-hour time frame. Again, very low volume as we kind of expect today, coming up to resistance on the 4-hour time frame and putting in an indecision candle currently, which will close in an hour and 30 minutes. Wadatar has given up on bearish volume. Parallax is still bearish. Briefly reached, just kind of touched on oversold right here. Nothing else really, nothing really bullish from here. Like we didn't descend deeply into oversold. We haven't crossed over into bullish territory, and we haven't broken any significant level of resistance on today's movement to the upside. Let's see here. We did just get about 2 million aggressive market sells, rejecting us from the 72.35 area here. We'll see. We'll see. This is kind of plunging us down to a previous level of support, but we'll see. Today's order flow has been kind of exhausting to follow. I'm not going to lie. Down here on the hourly, again, we don't really see anything. Let's see here. Hourly parallax would have caught you in for this last leg of the bearish candle. We did reach some pretty steep oversold levels here. If you guys were watching tensor charts, we also, in this same range, did get the delta divergence, which was a signal that I ignored. In hindsight, would have been a good signal at that time to follow. But delta divergence, although it's good, does have a high failure rate. But did push us up for this. And would have gotten us in that nice reversal long. Let's see here. Parallax did flip bullish here, as well as the powerful signal from Wadatar explosion. So far, we haven't seen a lot of follow through from that hourly close, only putting you in for about 0.5% of upside right here. And again, What I'd really like to see is that 7260 level get broken, i.e. get pushed out of my trade, and then see that, kind of reclaimed as support if we're going to see a little bit more of a sustained bullish push. But right now, this is pretty weak. Moving on from that, nothing really here. So let's go back down to the 30. And I guess the only things that we're really watching today, we can see here from the current range, we're currently rejecting, although it did look like we were breaking and reclaiming the point of control. So we're going to need a few more hours for this to kind of faff around and sort itself out. Looking at, why does VPSV always run off my chart? Here we go. Looking at VPSV again, you guys can see the exact same thing. Rejection from yesterday's point of control and breaking above today's point of control and just, again, sandwiching ourselves in there. Let's kind of see how this plays out. I don't really have any thoughts about this. This is just an area of the market where you just got to be patient. Wait for the move. Again, I've already picked my position. I was in profit all the way down here, watched it move against me, and we'll see if I can get, we'll see if the Bears can come in and push in some aggressive market sell orders and blow out this level and push us back down here to 7,100. Again, getting above that, getting the break above 7260, I think the first stop off will be again 7295, which is exactly where we took profit on the long, because this is where we did get the initiation of selling on this scam wick to the upside, on this bear wick to the upside. And then above that, we've got a point of control at 7400. So targets to the upside for those who want to take the breakout trade. Targets to the downside, we've already talked about from the higher time frames. Let's go out and look at like the hourly. We've got this pretty big yawning abyss below us. If you want to be aggressive, if you want to be conservative, actually, you can snake profit off around 7,000, just like we talked about yesterday. And then the only thing that we have is this consolidation area around 6880, and then getting below that, the untapped point of control. This area is important to me, around 6650, 6660. That's it for intraday. That's it for Bitcoin. So let's take a little sip of the coffee here. That's a New Year's resolution of mine too, by the way. For my coffee. This might seem silly to you guys, but I've always drank coffee, like, just one hand on the mug, hey, I'm drinking my coffee, right? And I've decided to attempt to enjoy my mind-altering substance a little bit more. So my resolution is that I will clasp it with both hands, right? And attempt to savor the flavor of the coffee. It sounds silly, but it's all part of my growing my mindfulness, growing my awareness, growing my gratitude, growing my appreciation of what's going on around me. So those things sound silly to you. I don't know. I really love my life. So try the silly things. They tend to work. Stefan Weaver, thanks so much for the sub, my friend. Also, New Year's resolution that I already started back in November, and this is a big one, all right? This is a big one. I know a lot of you watching are going to be struggling with this too. I struggle with this, right? So I had this problem for quite a while, for the last few years, that I could not fall asleep without the television on. Now, when I say the television, I don't mean like TV. I haven't watched regular TV for a long time, nearly half a decade now. But I do watch YouTube, Netflix, things like that, right? And so my routine at night used to be, I would go lay down in bed and turn on YouTube and, watch things. And this is, by the way, it's very embarrassing if you are, it's very embarrassing if potentially you're sharing your bed with somebody you haven't shared before, and you're like, yo, hey, I'm having trouble sleeping. I'm just going to turn on the Modern Investor. Is that okay? Click. So I couldn't fall asleep without something on, and I would just close my eyes and fall asleep to it. That was really unhealthy, right? And although I had done a lot of work on my sleep pattern, I couldn't break that. So toward the end of November, right after Thanksgiving, I realized this is something I wanted to change. And so I just told myself I wasn't going to do it anymore. I put it on the calendar. I set a date for it. I wrote out my plan like I always do. People that struggle with resolutions, it's only because you're lazy about it. You need to put it on your calendar. You need to write down the plan, and then you need to assign people to keep you accountable, right? So as it's annoying, but you need somebody to call you every day and say, hey, did you right before you go to bed, actually, I'm lucky enough to be able to ideally find somebody who's going to call you at 10 o'clock every night for 1 month and say, do you have Netflix on right now? Turn that off and have them yell at you. Give them full license to yell at you. Shame you. That's how, I mean, shame's a powerful tool. Anyways, so, and I got a book currently reading Philip K. Dick's Do Androids Dream of Electric Sheep? Great book. And yeah, so I no longer have to fall asleep to YouTube or Netflix. So, and that has helped tremendously over the last few months with my mood in the morning, with sleeping at night, with overall restfulness. Melatonin helps as well. And this, so maybe reading is not the best solution, but I do know I can, from everything that I understood, falling asleep to television is terrible for you. So, it's just very active mind. It's very hard for me to shut my mind off, but the book and no blue light helps. B-Flow, that sounds right up your alley, brother. Got to savor that cup, especially if it's a good one. It is a very good one. All right, so we've got some news to get into today. It is 12:40, so let's break it down for you, ladies and gentlemen, with today's Crypto Currently segment. And then after the Crypto Currently segment, we're going to take a brief break and we'll answer questions in the final portion of the show. If you guys have questions, don't feel like I'm ignoring you, pop them in there. The moderators will grab them and put them in the Q&A section for me, and I will get to them, I promise. But otherwise, I get off track. So here we go with today's Crypto Currently segment. All right. So our first story of the day is going to be about Ethereum, and it is a new decade, and we cannot let a January pass without pointing out Ethereum vulnerabilities. Now, I am not anti-Ethereum. I quite like Ethereum, although I'm kind of alone on this from some people who prefer Bitcoin. But anyways, moving right along, our first story today is going to be coming to us from Cointelegraph. The title of this article being Ethereum Network Overcame Intentional Attack Affecting Parity Nodes. And as I said in the open, Parity has been somewhat of a nightmare recently. Honestly, a lot of vulnerabilities, and I understand, listen, we have to be patient. Ethereum is the largest decentralized application network out there. It is one of the most active blockchains. It's not processing nearly the amount of value that the Bitcoin network is, but you have Bitcoin, you have Ethereum, and nothing else really comes close as far as actually being utilized. But the Ethereum network did apparently suffer a coordinated attack yesterday on New Year's Eve. And this was according to several reports that we received. Now, keep in mind, we talked recently last week about the fact that on January 1st, today, there was going to be a mini hard fork to the Ethereum network. And so this was a concern that a lot of people were looking out for. So it does feel like these attackers took advantage of kind of the distress that was already latent in the Ethereum development community as we were moving into January 1st, where people were already kind of annoyed that they were going to have to be on deck. Node operators are going to have to be on deck today to handle updating their client software to process the new little mini fork, the Muir Glacier, the Muir Glacier little hard fork. Which is kind of the first step to, well, not the first step, but one of the many steps that are required to get us from Ethereum 1.0 to Ethereum 2.0. Yay, Vitalik. Now, this all centers around Parity, and there were reports of Parity-powered or based Ethereum nodes that were losing sync with the Ethereum blockchain, i.e. network. This began to pour in yesterday, which led Parity Technology, which is the blockchain company that has developed the Parity client. This caused them to react. They released a patch. They released an emergency network upgrade to protect against what they considered to be a malicious attack. Now, according to cryptocurrency security consultant Sergio Lerner, this attack was implemented in a fairly simple way. Individuals would send blocks with invalid transactions to a Parity node, but with a valid header that they would borrow from another block. The node would mark the block header as invalid and ban the block header forever, but the header would actually still process as valid. Now, developer Liam Aaron analyzed the attack, and he said that it is potentially a potential threat to the entire Ethereum network, and he noted that Ethereum could become much more vulnerable to this type of attack, similar attacks in the upcoming year, mostly because mostly because the Go Ethereum client, or Geth, their nodes were immune to this exploit, whereas Parity had to scramble to release, as we just said, an emergency network upgrade. But this raises concerns about Parity and their client because they intend to transition Parity Ethereum to a DAO ownership and maintainer model, which would leave Geth as the only other well-maintained client in 2020 that would be immune to such attacks. So individuals that are continuing to run Parity, which is the most popular Ethereum client out there for node operators, leaving them largely vulnerable to this and potentially more vulnerable to this moving into 2020 until we get Ethereum 2.0, which may or may not resolve this issue, but it'll be an entirely different chain state. So I assume that it will. With Geth, Go Ethereum as the only currently popular client that is mostly utilized and well maintained, I should say. There are a bunch of other Ethereum clients, but not so well maintained as Geth, that would be immune to this sort of attack. Now, quoting Mr. Aaron, he says, if the scenario comes true, and by that he's referring to Parity transitioning to the DAO ownership model, attacks similar to today's, this was coming from yesterday, would devastate the entire Ethereum network instead of just being inconvenient as it was yesterday. Now, 2019 has seen Parity scramble to release multiple updates aimed at fixing node vulnerabilities, which has been a weak point for Parity clients for all of 2019. Back in November 2017, Parity experienced a major failure when their multi-sig library froze following an exploit where an individual took ownership and self-detonated the entire multi-sig library. I don't know if you guys remember that. Now, the question obviously is just how secure and stable is the Parity client or the Parity network of Ethereum nodes. So in May of 2019, security research organization SR Labs claimed that 1/3 of Ethereum nodes that were running Parity were still running versions of Parity that were vulnerable to a known 51% attack vulnerability. This is still the case today, we assume. More than half of those So 1/3 of the entire Ethereum network, according to this report, is vulnerable to a known 51% attack vulnerability, and 1/2 of those vulnerable nodes ran Parity software. This is very similar, although this is not connected. IOTA also experienced a similar attack on December 29th. IOTA users were unable to confirm transactions on the mainnet, and the mainnet seemed to come to a halt for nearly 24 hours. This was during this time, an unusual set of transactions were being propagated, leading many of the IOTA developers to believe that the network was under an attack. Now, the IOTA Foundation has since come out and said that the incident was not caused by any software changes or any other components of the network, but rather occurred due to, quote, the absence of transaction processing logic for an unusual set of transactions. Sounds a lot like an attack to me, although you guys can be the judge. That's just speculation on my part. What's not speculation on my part is that Parity has been an issue for Ethereum, and we have potential threats. So those of you out there who know a little bit more about Ethereum, how it works under the hood, please let me know. If you guys are watching the show, leave your comments in the section down below, or in the live chat, or in the comments if you're watching this on a Breaking Bitcoin's Bits, and let me know, in your opinion, how real is this concern to Ethereum? Do we just need to be patient for Ethereum 2.0? Ethereum 2.0 will solve all of these problems, or this is not as large of a vulnerability as potentially myself or these individuals are attempting to make it, or is this a real concern and more people are not talking about this, potentially due to, I don't want to say political, but entrenched interest reasons, shall we say, entrenched interest reasons. Either way, let me know, guys, how you feel about this. Now, our next story of the day, falling a little bit more into my wheelhouse, Bitcoin's advantages over altcoins moving into 2020. This is something that I think we don't talk about enough. And although I am well known as somebody who's very supportive of Bitcoin over the majority of altcoins, although I am an investor in certain altcoins, I've talked about this before, so I'm not a toxic maximalist, as some people would consider it. I just feel that Bitcoin, and I've stated this many, many times, not only am I involved in Bitcoin for the speculative gains, there is also a large part of me as a libertarian and as a borderline ANCAP that really desires to push this technology forward and make the world a better place. So my earnest desire is to decentralize finance and to destabilize and decentralize the traditional monetary system and see Bitcoin be adopted, or some decentralized, non-centralized, no single point of failure currency be utilized and adopted as our basic monetary unit. or as our base settlement layer for international transactions. Either way, or both coinciding together. I think that that is the better movement forward for humanity. Humanity, given enough time, always utilizes and adopts the best tools. It just takes them a while, right? So it took us a while to adopt the written word. It took us a while to adopt democracy. It took us a while to adopt cellular telephones. It took us a while to adopt the internet. But all of these things happen and they move us closer and closer and closer to escaping the confining and destructive power structures that out of necessity due to lack of technology that the human animal has adopted over the centuries, over the eons, over the decades. But as we move forward with technology, we can break and escape those social confining boundaries and actually push our species forward, not only in physical evolution, but, psychological evolution, social evolution, and of course, actual digital evolution. So I know if you understand that, if you study history and if you just look at how, given enough time, humanity does adopt the better tools, I think it becomes quite clear and quite simple to know that humanity will eventually get there to where we use decentralized currency. We have decentralized governments. We get away from authoritarianism. We get away from centralized authority. We get away from centralized points of failure. We get away from totalitarianism. We get away from authoritarianism. All of these things that are destructive and hold mankind back, because for the love of God, we need to get off this spinning ball of rock that could have a meteor smash into it at any point in time. That's the real issue here, guys. Can we talk about that? We are on a spinning ball of rock hurtling through the cosmos at God knows how many miles per hour. I don't have the statistic measured. At any point in time, any humanity-ending disaster could occur, and we are busy arguing about what's better, Android or Apple, instead of trying to work together to emigrate to other planets, right? We don't have any evidence of extraterrestrial life, and so that leaves us with the possibility that we might be the only intelligent species out there, or they're just waiting for us to get our stuff together to finally let us know that, hey, yeah, it's cool, guys. You guys come on into the Intergalactic Federation, but not until you're able to get off that rock and stop shooting yourselves with nukes. So that's the real goal here. And I do believe, and I think that it's fairly difficult to argue against the fact that something like decentralized currency can get us there faster. That is a route to a better state of mankind. And anything that we can automate, take off our shelves, not have to worry about, gives us more free time to actually begin solving the problems, because we've got a lot of problems in physics, in science, in medicine, all of these things, all big problems that we need to sort out. Immigration, cohabitation. There's all kinds of problems that the world is facing and that we could actually solve if we weren't busy worrying about the little stuff. So I think that, unfortunately, money being utilized as a tool of control, power, and suppression, which it has been, to benefit small groups of people, I think that we really need to be focusing on getting that under the table, which something like Bitcoin allows us to do. And I just don't see how, given all of its many advantages over its alternatives in the realm of cryptocurrency, I don't see how one can really make the argument that something like Ripple is better than Bitcoin. It's very, very hard for me to understand or accept that argument, or even not laugh at that argument, because that's just, to me, not the case. And I think that if people are objective about it, I don't think that they can see, if their goal is, hey, how can I make humanity better? I don't think that they can really, with a straight face, say, well, Ripple's better than Bitcoin. I think that if people want to get rich and they have faith in something like the corporate giant that Ripple Labs has become, they can say, I think that I'm going to make more money off Ripple than Bitcoin. That's fine, right? Go get your money, go get your hustle. I got nothing but love for you. But is Ripple better for humanity than Bitcoin? I think that argument falls apart pretty quickly, right? Because you can go no further than to say, well, what is the goal of Bitcoin? To strip out authoritarianism, to strip out centralized control points of authority. What does Ripple have what does XRP have as a cryptocurrency? Well, it has a centralized point of failure. And I don't care how many arguments I hear about smart contract this or lockup period this or agreement this or that. You have a centralized entity that yields over the network and the currency an untenable amount of power and influence. And that is antithetical to what we're trying to do over here, okay? So come on, people. I'm down with the hustle if you guys want to make some money off XRP. Make billions, make millions. Go do your thing, baby. But when we get to the serious business of how can we get humanity off of this rock, let's go Bitcoin. Okay, so let's talk about let's quantify. Let's talk about 4 distinct advantages that Bitcoin is going to have over altcoins moving into 2020. This is coming from academic Conrad S. Graff in his 2-part interview with Eurasia Review. This is the second installment. So I don't believe we actually covered the first part. Maybe we'll double back and touch on that. But first, let's just talk about scarcity. In this aspect, Bitcoin does win out over its major competitors in the cryptocurrency space. Quote, Bitcoin wins out over other forms of money, including other cryptocurrencies, largely due to its fixed supply. Quoting Graph, he says that Bitcoin's top competitive advantage is its ability to restrict new issuance, the relative reliability of its methods for controlling unit production. Specifically, he goes on to say that Bitcoin's overall supply cannot be manipulated. It is produced on a fixed schedule, and its maximum supply number 21 million cannot be manipulated or changed without a hard fork. So that overall supply, that large number 21 million units of currency, cannot be changed, and it cannot be increased to dilute the underlying value of the currency, whatever its market capitalization happens to become. No entity, no matter how powerful in terms of computing power, that is active on the blockchain network that can diminish the value of the existing Bitcoin held by savers by increasing the supply, which is the classical way, which is the way that it's always happened, where central banks have inflated the currency by increasing overall supply, which dilutes the value of previously held currency, i.e. decreasing the purchasing power of savings held by citizens, but increasing the purchasing power of the government or the individuals who can actually get their hands on the freshly minted money in the first place. Now, with Bitcoin, this is in direct contrast to other cryptocurrencies such as Ethereum or its other major competitor, I say that with a big grain of salt, XRP, which have mutable supplies. So that argument does not stand for them. They don't have a hard fixed supply. It can be changed. It can be increased, i.e. which gives, so you have to just project that. Knowing that, you project that into the future. Maybe it's not an issue now, but 50 years from now, 100 years from now, if cryptocurrency does replace traditional finance, when it does replace traditional monetary forms of traditional fiat, right? Traditional monetary fiat. And you have some form of centralized entity or some mechanism by which the overall supply can be increased, you've gone right back into the rabbit hole. You've exchanged one ruler for another, because whoever gets control over that, whoever gets control over the money, typically has control over the citizenry and over the laws and over international politics. And I digress, and moving on. Ethereum and XRP both represent that risk, as do all traditional fiat currencies. Thus, in this element of scarcity and its ability to be hard, Bitcoin wins, everything else falls down. Now, there are, of course, some cryptocurrencies which do have hard fixed supplies, but they're going to be fighting an uphill battle as we move on to some other factors of why Bitcoin wins over altcoins moving into 2020. Apolitical value transfer. This is huge. Nobody owns Bitcoin. Bitcoin is not owned by any nation state. There is no, I don't think there's any one nation state that has more of a vested interest in Bitcoin, because miners can pack up and move. Investors can pack up and move. This is currency that can be transferred digitally without permission from anywhere to anywhere in the country. So the entire idea that power exists in one area, that can change literally in 10 minutes. It can change literally in one block. So having something that is dynamic and as fast moving and as global as Bitcoin becomes very difficult to lock that down, because again, the winds of fate shift very quickly, and Bitcoin as a decentralized currency can shift as quickly along with it. Whereas, established centralized nation state fiat currency systems cannot. So this is an argument that Saifedean Ammous argues with. In a world where conventional systems are so politicized, Bitcoin has an advantage of being neutral, in the sense that it is controlled by none of the competing power blocks, which means that any and all could potentially participate. So, for example, you look at countries like Middle Eastern countries, for example, that are trying to get away from the SWIFT system, because the international settlement layer of SWIFT is largely considered to be beneficial to the United States and United States allies. Whereas you have other countries that want to engage in global commerce, but do not want to participate in that system that does not benefit them and actively anti-benefits them. Words are failing me, but benefits potentially a competing power source. This is the same with the European Union and SWIFT. They're not big fans of SWIFT either, because SWIFT requires settlement in the United States dollar, very similar to the Petro scam. So when we're talking about a international settlement layer that could replace SWIFT, Bitcoin relies up. It could have the liquidity, it could have the security, it could have that final settlement in an apolitical fashion that would actually be attractive if adopted by governments doing international settlement, that would not benefit one government or one power block unduly over another. Because remember the whole idea that, well, mining is centralized in China. That can change overnight. Maybe Bitcoin ownership is centralized in Russia. That can change overnight. So all of these things become very difficult for governments to actually pin down when you take the thought experiment forward far enough. Moving on, technical prowess. Bitcoin's technical prowess means its position as a market leader has been obvious for years. Hash rate alone has achieved an order of magnitude far beyond Ethereum or any other market incumbents. Bitcoin currently has 97 exahashes that protect its network to Bitcoin Cash's 2.5. Yeah, you heard that right. Giving Bitcoin a hash rate 39 times higher than that of even its next closest digital cash competitor. And just for comparison's sake, here is the graph of the Bitcoin hash rate, the amount of computing power that is securing its network compared to the others. And before we get into a side tangent of this about how mining is centralized in China, keep in mind that all that mining could shut down. I do believe that the Bitcoin network used to run off a couple laptops, and there's no reason that it could not again. Moving right along. It's not an entity. On top of all of these things that we've talked about, Bitcoin, as opposed to other blockchain attempts, is decentralized. It is no entity. There is no corporation that can be dragged in front of Congress like Mark Zuckerberg with Libra, for example, right? Even entertaining the idea that Libra would be good, that Facebook would design it, or that the Libra Association would actually design a currency, a digital currency that would actually work really well and be better than fiat, potentially as a bridge to a decentralized currency such as Bitcoin. There is still the government risk because Mark Zuckerberg or the Libra Association or anybody else can be hauled in front of Congress or the international courts, and charged and levied and decried and tarred and feathered and all of this stuff. Social sentiment can sway against them. Whereas, if a government has a problem with Bitcoin, like who are they going to drag in front of Congress? Will the real Satoshi please stand up? Nope. He is all of us. We are anonymous. We are legion. Do not forget. Do not forgive. Expect us. Now, so all of these reasons and more, I'm sure you guys can come up with more reasons. And I'm sure that you guys can come up with arguments against this. So let me know in the comment section down below after the video if you agree with these comments or if you agree with me about Bitcoin's kind of position of superiority or advantageousness over some of the altcoin alternatives. Not to smash on altcoins like they're useless. I think that some altcoins represent great use cases and great value investments. But in the realm of, hey, let's get serious and talk about who the big daddy is in the room, I think that we lose sight of that if we just focus on, the investment gains, and you kind of lose track of the overall global dynamic picture here. So leave your comments down in the section below for other reasons why Bitcoin is superior to altcoins, or give me the countervailing argument as to why altcoins or your altcoin is superior to Bitcoin. I'll randomly pick one of those comments tomorrow for tomorrow's YouTube comment giveaway, where we do give away cryptocurrency every single day. And on that note, we're going to take a brief break. When we come back, we're going to answer all of your questions. We're going to look at your chart requests. We're going to check back in with Bitcoin. But first, brief word from our friends over at ByBit and junior analyst at Midwest Attempts. A brief break. We'll be back in just a few minutes. Go grab some water, do a few deep knee squats, and I'll see you guys in just a second.
This is Jason when he first learned about Bitcoin margin trading on BitMEX.
Why? Why? Give it back! Give it back! Oh, give it back!
This is Jason 6 months later after signing up for ByBit with the Cracking Cryptocurrency referral link found in the description below. Don't make the same mistake as Jason. Sign up today at bybit.crackingcrypto.
All right, guys, welcome back. Thanks for holding in and checking in with Bitcoin. Currently trading at about 72.11, putting me back just a little wiggle back in the profit. Seeing a couple aggressive market sell orders come in, but so far unconclusive. On the very low time frames, we have seen our first lower high followed by a lower low. And our next lower high, looking for a lower low. Let's see if the bears can pull it in today for Bitcoin, or if we're just going to get more of this. Ping pong. One of my favorite games. Moving right along, let's get to the question and answer section for you guys. See what you guys got for me today. All right. Emma LG asks, can I explain the point of control? Thank you. Of course I can. The point of control is actually very simple. It is a component, or really just a metric of of a larger tool called the volume profile. And there are different versions of the volume profile, but really, let's start at the beginning. The volume profile is horizontal volume. That's all it is. It's volume by price instead of volume by time. So at the bottom of the screen on my chart, I have a traditional volume indicator from TradingView. I'll rack up the opacity here just so we can view it a little bit better. Normally keep it quite transparent. But this is volume by time, meaning that these are 30-minute candles. So in the 30-minute period, this is the amount of Bitcoin that was transacted, right? This is the quantity of Bitcoins that were traded during this time period candlestick, during this period bar. And we can look for patterns in here. We can look for, obviously I think both are good. But again, we can look for rising volume and a trend. We can look for falling volume and a trend. And one can potentially trade these volumetric characteristics of the chart or the asset that we're trading. Conversely, we can also look at, hold on, let me bring these back down to where I like them. Boom, bam. Conversely, we can also look at volume by price, which is horizontal, which is going to give us the exact same thing. But instead of volume by time, it's going to let us know by the size of the bar, how much volume was transacted at this price level. And so what we can get from that then is at what price level was the most volume transacted. And that is going to represent what we call the point of control, what the volume profile itself calls the point of control, the POC, point of control. And so there's a lot of different ideas and strategies around the point of control. Typically, this is intraday or longer term going to be, an area of significant support, an area of significant resistance, because it does represent a status quo in the order book. For example, if we are coming down to a point of control, we know that from price to go above a point of control, there had to be a lot of aggressive buying that bought in there. And so when price returns to that level, that's going to be the buy-in point of a lot of market participants, and we would expect them to potentially defend their positions. And if that level gets taken out or closed below, we can expect that a lot of those individuals would be looking to sell at a small loss, so therefore we could expect further downside, for example, like potentially right now. Let's see here. No new aggressive market punts, at least nothing that's come up across my radar. Let's see here. But yeah, Bennett has some really good videos on the point of control, on the volume profile. I have talked extensively about it. I have a premium webinar around VPSV scalping. So there are going to be two popular methods of the volume profile. One is going to be the VPVR, or volume profile visible range, which will adjust depending on how much of the chart you are looking at. You can customize it however you like. In this aspect, you can see that the yellow dotted line is the point of control. So again, if we kind of zoom in and look at this entire range, again, we can see the point of control line up very nicely. What I prefer intraday is the VPSV, which is the volume profile session volume, i.e. the volume profile for each day. And we can kind of see how the volume profile has developed over time from day to day, right? And this combined with some other metrics like daily open, daily close, daily high, daily low, significant levels of supply and demand, if we're close to them, these can all kind of help you form a game plan for your trading strategy. In the most common sense, I guess, as far as trading strategy, the idea is that high volume nodes, or thick high volume nodes, these are going to be nodes that have high volume, represent areas where price likes to hang out a lot because there's a lot of buyers and sellers. And when there's a lot of buyers and sellers, there's a lot of disagreement over price. So you're going to get a lot of ranging. Areas of low volume nodes represent areas where there's not a lot of disagreement, where buyers are clearly in control or sellers are clearly in control. And price likes to go from point of control to point of control to point of control very quickly. So price likes to move through low volume nodes very quickly. Price likes to hang out in high volume nodes. So low volume nodes are the train tracks. Trains move quickly along train tracks. High volume nodes are the train stations, where the train likes to dock for a little bit and the passengers want to have a brief row about the current direction, the future direction of the train. Great question. Thank you so much, Emma. Wendy says we are still above the 21 exponential moving average on the monthly. Yes, we are. One thing that I want to point out, I've pointed this out before. In Bitcoin, the 21 monthly exponential moving average has not in recent history, or honestly ever, been a significant bottom, right? It's almost always a stopping block on the way to higher or lower prices. So as we can see over here in 2018, ARPA just hit take profit 1 for guys in the premium trading group. Congratulations, guys. Make sure to move those stop losses to break even. As I just did. So as we can see over here in 2018, the first time that we touched the 21 exponential moving average on the monthly, we did get a pretty significant bounce. It was a 20% bounce, definitely tradable. But all that goes up must come down, and we did reach that level. And what did act as significant support? The monthly 55 EMA, which is currently hanging out right at 5108. And scientists have told me that 5108 is actually pretty close to 4900, which is my lower downside price target. So here we are again. We have, as we can see, the first time we tested the 21 coming down from the all-time high, which is, again, you can look at this market structure. The run-up in 2017 is being very similar to the run-up here in 2019. We tapped it, got an immediate explosion off. Here we tapped it, got an immediate explosion off. We did. We ran all the way back up from the lows to about 75. What do we top at? 77.80, and crashed right back down as we did right here. Took us less time, but also this market cycle is unwinding or is occurring much quicker than it did back in 2017 because there was a lot more buildup for the 2017 run, whereas there was less buildup, as we can see here. There was less buildup. There was only 4 months of buildup for the 2019 run. That's why it didn't last nearly as long. It also took 2017 more time to get off the ground. But again, if we go back to what the prices were in 2016, you could say that that was a very long and sustained run. So do I think that the monthly 21 supports price? Unlikely. Unlikely from that metric, from that perspective, from my experience with monthly 21s. You know, they're good for trend analysis, but it's not very good for support and resistance. Macro, anyways. Eric Cartman says today, and only today, for a limited time, today is the day when we find out if Craig S. Wright was BSing or not about getting the lost keys to the real Satoshi stash of 1.1 million Bitcoin. Moon, if lost forever. Well, I'd say that based on what we know right now, I think he's full of crap. I think he's definitely full of crap. So, see if that bonded courier shows up or not. I doubt it. So about kind of the coffee, kind of about the coffee comment. Do I listen to affirmations before falling asleep? No, that's my morning thing. Chaotic Crypto says Bitcoin is a new paradigm in which there is a new game of competition with Bitcoin as overseer. Interesting comment. Wendy2 says, is there any proof that Satoshi mined 1 million coins? I've heard conflicting chain analysis that says otherwise. Well, All right. Thank you so much for the sub on YouTube or on Twitch, excuse me. Crypto Nutshell. Thank you so much, my friend. All right, disclaimer from this individual who did this little bit of analysis. He cannot assure with 100% certainty that all of the black dots are owned by Satoshi, but almost all are owned by a single entity, and that entity began mining right from block 1 and with the same performance as the Genesis block, which we know was mined by Satoshi. It can be identified by constant slope segments that occasionally restart. Also, this entity is the only entity that has shown complete trust in Bitcoin since it hasn't spent any coins, at least as the eye can see. I estimate at eyesight that Satoshi's fortune is around 1 million Bitcoins or 100 million USD at current exchange rate. This was a while ago. I'm sure there will be plenty of people that will carefully analyze the source data set and come up with the exact figure, which will be very close, but nevertheless, they will scream at me again. So I will drop this link in the chat if you want to look into this a little bit more. I do know that you have to look at multiple wallet addresses. So here's a Coinbase reward. So for a miner, 50 Bitcoin. Few different addresses, all with Coinbase generations, 50 Bitcoin, which was the block reward. 2,472 there. This is the Genesis wallet, 68 Bitcoin left in there. $1,148,800 Bitcoin has not been spent. Need to check each individual block. Use different addresses. Yeah, further confirmation, there is no single address, just the Coinbase reward for most of the early mined blocks. Exactly how many of those blocks he mined is up for debate. The $1 million figure comes from the analysis that we referenced right here. I will say this, that number, I follow, I would say, some of the most relevant figures in the blockchain space, in the Bitcoin space. People like Andreas Antonopoulos, Jameson Lopp, just to name a few. And I've seen this all affirmed by individuals that work on a Bitcoin, develop for Bitcoin, have been with Bitcoin for a long time. So I've never seen this hotly contested. I wouldn't say this is a contentious issue. But would like to see any kind of conclusive evidence to the contrary. That's what I am all about. All right, let's see here. Where does BitMEX pull data from? Well, BitMEX pulls data from its own order books as far as price is concerned. So BitMEX mark price is generated from order flow on its own exchange. Last price is generated from order flow on its own exchange. And mark price is the index price that BitMEX pulls from, plus a decaying rate. All right. You can look all this up on bitmex.com. You just go to their documentation section. They explain all this. But But they pull from Kraken, Coinbase Pro, and Wabi, I believe. Yeah. Coinbase Pro, Kraken, and Wabi, I believe. I think it changed about 6 months ago. But not... Can't remember what they removed or added. But they pull to get the index price, which is... Oh, shoot, what's the... we can find out real quick. Let's just go to BitMEX. A hive of scum and villainy. BitMEX indices. BXBT, yeah, that's what it is. Yeah, excuse me. It's Bitstamp, Coinbase, Gemini, Itbit, and Kraken. And you can see the percentages here. So yeah, they did update this a little while ago. And then you can see the index for Ethereum, Bitstamp, Coinbase, Gemini, Itbit, and Kraken, same thing. Their Ethereum XBT rate, their XRP rate, their BCH rate, and you can see all the weights that they give to the exchanges. So more weight, the most weight given to Coinbase. You can see the index price at BXBT. Yeah. So here's the index price, right? Which is also kind of similar to what you'll see from AgriTrade, which is aggregating trade data from multiple exchanges. For example, it depends on what you want to select, but currently my trade aggregator is aggregating data from BitMEX, Binance, Bitstamp, Poloniex, OKEX, Wabi, CoinEx, ByBit, HitBTC, Deribit, Kraken, GDAX, Binance Futures. Leave that up. Future reading. Here's another link. I'm going to drop this in the live chat that you might find interesting, Wendy. This is from news.bitcoin.com about Satoshi's $1 million haul. It says here, new analysis by BitMEX Research has called that number to maybe be 30% overestimated. Yeah, so they're saying about 600,000 to 700,000. So $2 billion wiped off. But I will tell you this. The moment one Satoshi moves out of one of those early wallet addresses, you're going to know about it. Because I guarantee you, crypto Twitter will not shut up about it. Neither will I. Jack says, the bonded courier, if he understands this correctly, would have the encrypted data containing the Tulip Trust's agreement and the party's multi-sig keys, which in itself needs decrypting, right? So it wouldn't be immediate. Let's see if we can see 700,000 swipe down to the downside. Didn't Craig Wright say that it was 1 million BTC? I think that's what Craig Wright said. So that's interesting. If BitMEX research is correct and Sergio's original report is somewhat incorrect, that Satoshi Stack is more correctly 600,000 or 700,000 or whatever kind of that early mining pool or early adopter mining quantity is. And that's correct. And Craig, who claims to be Satoshi, says that it was 1 million, but he was just getting that number like just about everybody else did from Sergio Lerner's 2019 study. Then that would seem to lend more credence to the fact that he is absolutely not Satoshi and he is just making things up. All right? Hopefully you guys see the argument here. That was weird. Oh yeah, I forgot to open the chest for my brothers over there on D Live. Let's do that. Oh, whoops. I put another 50 in there. My bad. Cyber Grinder, thanks for the follow over there on D Live, my friend. Distributing. 3, 2, 1. Bing! Congratulations, Wendy, Ricky T, and Lino Founder, my friends. Somebody was telling me to watch. Thank you for the ice cream, Ricky. Thank you for the 5 lemons, my friend. Wendy, no, it was 2013. So 1000. Yeah. 2001, 2002, 2003. Neunzehn, yeah. 2019, for some reason. My brain stumbled there for a second. Yep, we got the Satoshi's Wallet alert bot in Discord as well. Maybe the Tulip Trust was really an insurance/will policy of the Kleinmans. He made some elaborate smart contract scheme to award his Bitcoin stash to his family. It's possible. I have heard that whoever invented Bitcoin was not stupid. And volume has died down, babies. I'm going to disagree with you that open interest is rising. I'm going to say that open interest has been declining. And we have also seen short liquidations now. Maybe another push of short liquidations? Leave the Russian talk to Tone Vase, please. Das ist Deutsch, mein Freund. Not Russian. Jack says, so Craig's Tulip Trust and elaborate story is so inconsistent and strange because he's shamelessly trying to stake claim he knows a dead man cannot contest. Yeah. Speaking of open interest. Is that rising or falling open interest? Short liquidation? Not that many, though. Sometimes can take us a few purges. Yeah, we really haven't seen the big volume sell-off. Open the chest. All right, guys, I think we're getting close to the end here, guys. Gonna walk down to the beach and watch the polar bear swim. New Year's Day, guys. We're the only ones left online right now. Yeah. Crypto unites us all, my friends. All right, guys. With that being said, let's check out the hourly here real quick before we kind of vamp out. Again, 72.30 showing us our strong resistance. Need to see the hourly close above that. Hourly close back below, what is this, 7,000? Yeah, 7,200, where the bulls are currently holding their stand. Very compressed, man, very compressed. Be careful of the movement that comes out of this. How does Tone Vase know Russian? I thought he was from the CIA. Sent to Earth to kill altcoins. Done. 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 All right, guys, trade safely out there. Okay. Thank you guys so much for joining me for another episode of Breaking Bitcoin. I have been your host, Justin Wise. I am the lead analyst and senior mentor at CrackingCryptocurrency.com. I hope you guys go on to have a fantastic rest of your day and a happy new year. Make sure to take advantage of this day. Write down the resolutions. Write down the changes that you want to see in your life, and then actually put them on your calendar. Get yourself an accountability buddy and put those plans into action, because the best laid plans of mice and men remain the best laid plans of mice and men, i.e. bad plans, if you guys don't set yourself some structure and you don't set yourself to be held accountable for the decisions that you make. We all want to grow in life, but the only way to get there is by putting in the grind and making yourself accountable to the decisions that you make. Don't just leave it up in the air. Don't make the decisions to change the changes that you want to make in 2020. Oh, well, I'd rather not go to the gym today, or I'd rather not eat healthy today, or whatever. No, make it so that you are actively punished, just like the blockchain punishes malcontents, malicious actors with stripping their money away. Make yourself lose money or something. I don't know. Figure it out. There are all kinds of ways to incentivize you toward positive change and disincentivize you towards lethargic despair on your couch eating Cheetos. Okay? None of us want that. None of us want that. Investors in Tron, I'm looking at you. Now, if you guys would like to start off 2020 with a good resolution, if you guys would like to improve your trading prowess, if you guys would like to trade with my team, receive mentorship, utilize our tools, and learn our rules, then I invite you to check out what we do in the premium trading group at premium.crackingcryptocurrency.com. Link down in the description below to start your trading in 2020 off right. We are the fastest growing trading education group on the interwebs, and I think for very good reason. Very proud of all of our members and the progress that we've made through 2019. Really looking forward to kicking it in the butt here in 2020. If you guys have any questions, comments, concerns, sarcastic remarks, or death threats, please leave them in the comment section down below, and I'll try to get back to you within the next 48 hours if it's germane to the conversation. I want to thank today's sponsor, Coygo. Make sure to check them out at coygo.crackingcryptocurrency.com. Link in the description below. Very fantastic app. Very proud of the company. It's in beta. It's free. Do yourself a favor. Go check it out. And of course, today's crypto comment giveaway sponsor, Spectre Security Coin. Shout out to you guys, my friend. Keep on pushing. We will be back tomorrow at noon Central Standard Time for all your crypto-related needs. Until then, I've been Justin Wise for Cracking Cryptocurrency. Have a good one, guys, and trade safely.